Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and on this episode, I'm joined by Ian Everard, precious metals enthusiast and owner of ARC Silver Gold Osmium. Today, we're honing in 100% on the precious metals markets, discussing a variety of topics around gold and silver, as well as touching on platinum, palladium, osmium, and a new metal he's stocking at ARC that you've probably never heard of, but that has a vital strategic importance and is in very scarce supply. So strap yourselves in. I hope you'll enjoy this conversation with Ian Everard. Ian Everard, great to have you back on the show. It's been a while since we last had a discussion. So I want to start by asking you, what are the main themes and trends you're currently watching when it comes to the gold and silver markets that you think more investors and stackers should be paying attention to right now?
So I keep a general eye on premiums. The premiums seem to fairly reflect the retail activity. Also keeping an eye out on the bigger picture. And the Royal Mint released some figures a week or so ago, and their estimate of above ground physical silver is 2.5 ounces per person on the planet, compared to 1 ounce of gold. So that's a ratio of 2.5 to 1. So talking ratios, and we're around 89, 90 to 1 on the official gold silver ratio, whereas the physical availability is 2.5 to 1. So yeah, that's one thing I keep an eye on, ratios. I think they're more instructive in looking at dollar denominations, for a lot of aspects of commodities. You can see the comparison. What is most undervalued gives us a clue possibly where to best invest into.
Yeah, absolutely. That's an interesting statistic. I want to touch on gold and revaluing the U.S. gold reserves, because they're held on the books at $42.22 per ounce. First of all, why is it that gold is recorded at such a low price level when it comes to the balance sheet of the Fed? And is it a realistic proposition to revalue gold at its trading rate? And what would be the benefits and negatives of such a move?
So I did a bit of math on that. So I'm going to refer to my cheat sheet. So the market value of gold currently is around $93,000 a kilo. So if we revalued, say the US has got 9,000 tons, the math works out at $837 billion if we mark to market the gold. Let's put that in perspective. The US is running at a deficit of $6 billion a day and rising, and projected to rise further, with the latest budget proposals are proposing 800 million savings and multi-trillion tax cuts. So every indication is for the next 3.5 years, the deficit is going to increase at a similar rate that it has in the last 8 years. So mark to market, $837 billion, divide that by 6, that would pay for 140 days of government deficit. Doesn't sound so significant then. So let's have a thought experiment. Let's 10x would be nice for us stackers. I think we'd all appreciate our gold having instantly 10 times the purchasing power. That still wouldn't take us to the end of the current president's term in deficit spending. If we revalued somehow, everybody in the world agreed gold is now worth 10 times as much, we still won't break even. So it's looking a bit irrelevant, isn't it, to me, how much gold the US has if we have the 9,000 tons? It's sort of that would make a difference, not running, just breaking even for a year. But we're still left with the $37.5 trillion of accumulated debt plus interest, plus some people say 100, some people say $200 trillion of unfunded future promises, future liabilities. So we haven't got enough gold, even at 10 times, to really actually turn the ship round.
Why are people talking about revaluing the gold if it's going to make such a small impact?
I guess maybe people don't do the math. I mean, I just did this math this morning preparing, because I thought you might ask about that. Everyone's talking about it. And a lot of precious sound metals people, guys talk about, well, if we revalue gold to equal all of the currency out there, everything will be fine. Well, it won't, because there's more debt than there is units of currencies. And now do you have to revalue precious metals to all of the debt that's out there? I just don't think we have a path from where we're at to anywhere sensible.
Yeah, definitely agree.
I don't think there's even a rocky road. There's no road. There is no route. Now, for individuals, yes. But for countries, no. There is no route to get out of this inflationary trap that has been forced upon the Western world. I don't think people voted for it, although they've become complicit with it. Whilst people have appeared to prosper and their wealth has appeared to grow, they've gone along with the lie.
Yeah, you brought up the fact that if we have the stated gold reserves, which leads to another point about auditing Fort Knox. This is another topic of discussion that's been out there, getting an honest audit of Fort Knox. Do you think this is a realistic proposition? And if the government keeps delaying it or stops indicating it's something they're pursuing, should we assume the stated gold reserves are likely not really there?
One, I would say it's almost a practical impossibility, because one, it's not just at Fort Knox, it's at West Point, Philadelphia, Denver Mint, probably several other locations, if we have the approximate 9,000 tons. My suspicion is the US might have an awful lot more of gold, but it's not really supposed to have from all of the wars we've been involved in. The gold seems to disappear. We could have a whole lot more, but will we get an actual meaningful audit? Well, I think China's proved that that's pretty well impossible with their gold-wrapped tungsten bars. So are you going to cut each bar in half, drill a hole for it, X-ray it, each bar by bar? Because a hallmark doesn't mean anything, and a surface test doesn't mean anything. Could be full of tungsten. I got a lump on my desk here, a nice lump of tungsten. I mean, same density as gold. I could wrap that in gold. You could put it on some metal testers and it would say it's gold. It would have the right density. It would pass the density test. So meaningful audit, I would say it's practically impossible. The only meaningful audit, and I just thought about that this morning, would be, do you know what? Let's say there's 9,000 tons. We divide that up and we divide it and we send a piece of that to every American. And that would be a fair audit. It's supposed to belong to the people, isn't it? I mean, a big chunk of that came from World War II, where Britain had to pay upfront in gold for military aid because, and now I'm going to say we, because I say we, I'm American and British now. I live between the two worlds. Britain, we stopped paying America in 1934 for World War I, so the condition of help in World War II after America really got stuck in was we had to send the gold up front. And that was shipped across to Canada and by railroad down to Fort Knox. So there should be, if the gold is there should be an awful lot of British gold bars.
And so should we, because obviously with China, a lot of people believe that their stated gold reserves are understated, that they have far more gold than they're letting on to. And in America, the speculation is that there's far less than is being stated on the public record. If you had to venture a guess, what would you say about America's gold reserves? Do you think it's all there?
I think we have too much.
Okay, so do you think it might be understated then on the American side as well?
I think we're understated.
Yeah.
Can the powers that be, the leading financial elite, the bank, can they be that stupid for an asset that the Bank of International Settlements, was it many years ago, declared that it was going to be a tier 1 asset. It is now a tier 1 asset. It's replaced the euro as a central bank reserve. It will replace the dollar as a reserve. Can they be that stupid to not have the gold? Possibly. And China, we know they must have way more. They mine 400 tons a year.
Right.
And they import gold. Just do simple math. They've got tens of thousands of tons.
And so let me ask you this. I don't know if you pay much attention to what's going on in Canada, but Canada supposedly has 0 stated gold reserves. Do you think that is also smoke and mirrors, and that they must have gold as well.
No, I think that's genuine. Hopefully, they've done the calculation. We've got gold in the ground,
Right.
and barring invasion by the US or Russia, I don't know if the US would be crazy enough to military invade Canada. Possibly. Doesn't that sound strange?
Yeah.
There's a potential that the US could invade Canada, but I don't think that will happen. I think so. Canada has got huge amounts in the ground,
Right.
so in a way, that is safer than having it in a vault, isn't it? In a way,
Right.
At least the bankers haven't stolen it yet or rehypothecated it. Hopefully. So,
Well, I want to talk about gold holdings in London because they're at a 5-year low right now. What do you make of these outflows? Is this sovereign nations repatriating their gold? And as more people stand for delivery, will that put a strain on or perhaps even break paper manipulation of the gold market?
paper manipulation, are they going to stop voluntarily? Maybe if the losses add up too much, with the shorts just keep getting burnt. The risk departments of the bullion banks might just say, "That's it, just cover your speculations, and we're going to get out of it." It's possible, but it's more likely than not there's going to have to be a physical failure to supply at some point. Now, is an 8-week delay a failure to supply for gold? It's getting that way. I mean, 200 years ago, we could move gold from Britain to America quicker when it went by sail ship, steamship, and horse and cart. we could move it faster. So now, could that generally be a logistics? They're just so swamped with the demand. I mean, one reason is always given that the British gold is in 400-ounce bars. That's the standard for the Bank of England. And here in the US, it's 100-ounce or kilo. So one reason has been, first it has to go to Switzerland and it has to get converted, refined, assayed into the 100-ounce or kilo bars. And that logistically could be a reason. But even so, the amount of gold that has moved, I think, is record breaking now.
And so what do you think the reason is behind all of these gold outflows?
It looks pretty certain that a lot of this gold has been counted several times. It's been leased out. So it's supposed to be in the vault. It might not be in the vault. Somebody has taken the physical gold. They have sold the gold. They've got the currency, the fiat currency. Now they speculated with the currency, thinking that will outperform the gold and they can turn a profit. And then when they need to, on a lease, return the gold, they'll be in a profit. They better buy the gold. So a lot of people could be stuck now. They haven't got enough currency to buy the amount of gold they need to return. I mean, with gold, the rolling year on year, I think we're about 33%, 34% on the rolling year on gold. You could have done pretty well with your dollars to get a 33% gain, plus your cost, plus your fees. So yeah, I think there's a likelihood the gold has been counted several times over what actually exists. And it appears there's always been a game between New York and London. They always seem to count, if New York is short, they count some of the gold that's in London, and no one actually knows because there's no independent audit. And the Bank of England is a private entity, same as the Federal Reserve. So you've got two private entities that are major players in this game of charades, really.
Well, silver as well. When we look at the LBMA, the silver stocks are at the lowest they've been in nearly a decade. So that was an interesting comment about your thoughts about people essentially. You're saying when it comes to the LBMA that people were purchasing the gold and then looking to return it later, kind of like in shorting, or how exactly does that mechanism work? Help us understand how that process works.
So there's a presumption, looking historically at the price action of gold, that a smart fund can outperform it. So they will lease the gold. So they pay a fee, which historically is very low, because that then means the actual owner doesn't have to pay for storage. They take the gold, they sell it. Now they've got fiat currency. Now they gamble. I would say it's gambling, because if you've got to repay something back and you're not sure what your gains are, they are gambling that they'll be able to buy the gold back and return it at the end of the contract if if the contract isn't rolled over. And historically, I think these contracts have just been continuously rolled over. There's a lot of incestuous, the boys' club. In Britain, it's the private school. You've got the right school tie. You get connected. Here, I don't know. Is it the Masons? Is it the Federal Reserve member banks? There's all these layers of connections that old boys clubs do favors to cover each other. And until that breaks ranks, it can be incredibly successful in manipulating prices, because some of this gold is obviously dumped onto the market, which served the purposes of the central banks in depressing the price of gold at some point.
So it is almost like a short selling, similar to short selling, in that you're hoping either the price of gold goes down, you can
exactly.
then, or that it goes up at a low amount and you can make more money in the meantime with that fiat.
And now the squeeze comes, you've got retail investors buying gold as well as family offices. So now you're getting much more of a squeeze.
Well, let's talk about the silver stocks at the LBMA. Is this a similar mechanism in your mind? Because we're seeing stocks at the lowest level they've been in 10 years. Is this a wider trend of counterparties looking around at the current global economy, record levels of debt and deficits, and saying, I want delivery of these assets? Or is it more of this type of short selling that you were speaking of when it comes to the LBMA?
I think a big part of it is industrial demand. I've got one of these big boys here on the desk.
Wow. I have never seen one of
of
those in real life or over a
That's
video
a Canadian
call.
one. Got that one just out for you, Jesse.
Nice.
So yeah, I think a lot of it is actually industrial demand. I mean, we had a situation just over 2 years ago where the refiners were purchasing a lot of these 1,000-ounce bars on the secondary market and then selling them on to industrial users. Now, why were they doing that? I think one reason could very well have been they had a shortage of silver coming into the refineries from the mines, from recycling. Now, that really started to fit together because I think about 6 months ago, it came out really clearly that China has been buying precious metals straight from the mines in concentrate and doré bars, so the unrefined, partially refined state. So that is going to have a knock-on effect on how much silver gets to the refiners, it gets into the official system, onto the COMEX, into the onto the precious metal exchanges. So I think there's a genuine shortage, and it's reflected in the premium. Now, if I take one of these to one of my wholesalers, they will give me spot straight away. If I take them 1,000 ounces in rounds, 10-ounce bars, 100-ounce bars or kilos, they'll give me 25 cents back of spot. So they'll pay me more per ounce for one of these. So that's telling me they've got a ready buyer for these at 25 cents higher than a retail product.
So I want to talk about retail participation in both the silver and gold market, because according to a lot of people I've spoken to on this show, they're saying that the data they're looking at shows that it's not very strong. We've seen a lot of outflows from gold ETFs as well. In the East, it might be a bit of a different story. In China, the government is encouraging people to stack gold. They have more of an affinity for it. Same in India and a lot of other nations in the East. What are you seeing at ARC when it comes to physical gold and silver buying by the retail public? And do you think we're kind of in the early stages with all of this debt and deficit situations you've been talking about, the fact that the LBMA is coming up short? Do you think this could all lead to kind of a cauldron that's boiling that could eventually explode into a greater level of retail participation in the West as people kind of wake up to what's going on, or just realize, the average person on the street, hey, price go up, maybe that's something I want to chase? What are your thoughts?
I think there's several things going on. Personally, I think $32 in silver. When silver holds that as a floor and starts pushing up from there, and it might make some corrections, but it keeps coming back to 32. Now, we're early in that stage. We had the breakthrough last year to nearly 35, and we pulled back to just below 30, and now we're around 32 and a half. It's looking pretty stable. I think that will make a big difference. One, for new buyers, and two, for existing buyers who are on the sidelines waiting hoping for a significant pullback. I think there's a high chance we won't get that this time round. I think more information is getting out. More people are actually inquiring, what is money? What is a store of value? And then that figure we mentioned earlier, 2.5 ounces of above ground physical silver, that isn't actually all available. It's not available in retail form. A lot of it is in flatware, in vases, in jugs like that jug up there, in art. It's in private vaults. I've got clients who stack these up like us mortals stack firewood. They stack out by the cord, and this is designed to pass down to the grandchildren. So a lot of the above ground silver isn't actually available, and it's definitely not readily available in a retail friendly form. There's a finite capacity of the mints, and that's why historically we see great fluctuations in premiums. The premiums can go from $1 to $4 just on a generic 1 ounce round. But it doesn't cost the mint anymore, but they're just making $3,500 more per 1,000 ounces they put through their mint. That's just based on when demand exceeds supply. So it happens very quickly in the retail market.
Yeah, I spoke to Peter Schiff recently, and he was saying that as the gold price continues to climb, that, for your average person out there, an ounce of gold might not be something that's so affordable, but that their attention may then turn to silver, traditionally known as poor man's gold. And they might start looking at that as an asset that might appreciate, similar to as they watch the gold price surpass $3,000. Do you think we could see that type of trickle-down effect?
Absolutely. Yeah. I mean, generally, I view silver as fractional gold. Now, it's at a variable ratio, but that ratio never breaks. One way to look at it is a really big, fat bungee rope, big, fat elastic rope. And you can stretch it out, but they're always connected and it will always pull back. I mean, 1980, we saw 15 to 1. The perceived ratio in the Earth's crust is 15, 16 to 1. The mine ratio is 8 to 1. The physical, ready, potentially available metal is 2.5 to 1. I think when people start realizing these ratios, silver is exceptionally good value. And, we talked about ratios earlier. I am convinced that gold is very undervalued compared to the dollar. And silver is very undervalued compared to gold.
Well, let's touch on some of the other precious metals, the platinum group metals, platinum, palladium, and osmium. How do you see these three metals positioned at present?
Palladium, I think, is very tricky. Russia did completely collapse the palladium price. They had released a while back huge stocks from the Soviet era. That is non-transparent. They could well do that again. I'm not sure how effective the sanctions have been on Russian platinum and palladium. They're major producers of platinum and refiners of other people's ore. And that is surprising. In 3 years, that hasn't, platinum's hard. I mean, platinum's up 8%, I think. I think I wrote it down. It's hardly moved compared to gold, and palladium is down on the rolling year. So they're tricky as a private investment. But the potential, platinum is definitely undervalued compared to gold, and gold is undervalued compared to the dollar. But does that mean it's going to move as fast as gold? I don't know.
Yeah, maybe for those with a longer term time horizon, I just added a little bit of platinum to my stack not too long ago, just to diversify, and it does appear to be very undervalued.
I mean, somebody who knows 100 times more than I do about precious metals, David Morgan, he said, platinum is below its cost to produce. If you're patient, it's going to do okay. Will it do a 10x or a 20x? I don't know, because at some point, gold and silver, particularly, I mean, gold is still viewed as money, as a reserve. Silver is sort of sits on this industrial use, monetary use. So I think silver has got the greater potential of people realizing, no, this is a store of value. I need it now.
And any thoughts currently on the crystallized osmium market?
Yeah, it's developing. It's developing as a luxury brand. I mean, that's a Swiss.
That is nice.
with osmium face. The luxury brands are taking to it. It is a hard concept how tiny the production is. 350 kilos of the crystalline osmium, that will be the production cap. So that is hard to conceive. I mean, we've got one client, he's making these beautiful rings down in San Diego.
That is nice.
You can't do it justice on the camera. You have to sit in sunlight to see it.
Yeah.
See it just really come alive and dance. So it's a hard grasp as an investment for a lot of people because it's a private monopoly. The Swiss company that makes it, it's a private monopoly. The German institute that cut and certify and distribute it. That's a bridge too far for a lot of people, which is absolutely fine because there's only such a tiny amount. There's probably not even an atom of it available per person on the planet. I haven't worked out the math atomically. So that doesn't matter. It's going to do very well. It's a niche, high-end jewelry product. Or that's where it will end up. At the moment, it's relatively affordable. I mean, we've got pendants in it and earrings, and these compare very favourably with diamond. You get a lot more sparkle for your dollar. The brilliance is so much more. So it seems it sells on its appearance. We have a few clients who've added to their precious metals portfolios, and some people just it's not for me. And one question is the liquidity. There's a continuous 24-hour day bid for silver and gold. Now, osmium, if we've sold it to a client, we would like them to come to us first, and we will bend over backwards to buy it back at a very tight, a very small margin. But can we guarantee that? No, we can't guarantee that. So maybe it's for the brave, maybe it's for the adventurous. It's a fascinating because it's a metal, but it looks like it's got the brilliance of diamonds. And that scarcity in the crystalline form, which is also based on the scarcity of it in its raw form, is that's the proposition, not for everybody.
Yes, and so that's interesting. A lot of applications when it comes to jewelry, and I think when it comes to investment or adding it to the stack, I think it's something you put in your safe and you just don't even touch. You just let the years pass, and maybe you pass it down to your heirs, like similar to gold in many ways. I don't think there'd be a circumstance where I would sell my gold unless things went Weimar Republic and you could buy a house for a gold coin or something like that, in which case maybe I'd consider it.
What do you mean unless? Don't you mean when?
But perhaps when? Do you think we'll experience that type of severe hyperinflation of fiat currency globally across the board at some point in time? Do you think it's going to only be certain currencies? Could it happen to the dollar independent of other fiat currencies? What are your thoughts there?
Debasement this time around, and as far as I'm aware, that's never been tried in human history. The Weimar Republic was debasing the currency whilst the rest of the world were tightening their money supply. And it worked in Germany, I think, for 2 years. Germans thought they were rich and they were stashing these notes literally under their mattresses till they realized they weren't. And then it just turns on a pin. Will we see that extreme and that fast? I think for most of our stackers, it doesn't matter too much because we are going to see a destruction of perceived wealth, i.e., all of these digits that people think they can buy a certain amount of goods and services in the future, they'll realize they can't. So there will be a mix of destruction of perceived wealth, and then there'll be a transfer of actual wealth to people who hold the commodities. 1980, one and a half of those big bars bought the average US house. So at the moment, you could buy one and a half of these for about $47,000. So I would say we're definitely going to see that correction. So what's the average US house? 280, 300,000 ballpark. So that's a factor of 7 or 8. So we're going to see that move in silver in purchasing power.
So we have a very interesting documentary in the works. It's going to be on this channel. It's about a metal most people are unaware of, but one that is of vital importance with an extremely limited supply, and that is rhenium. So walk us through this. What is rhenium, and why should precious metal stackers think about maybe adding some to their stack?
So I came across rhenium because of the crystalline osmium. And I came across the crystalline osmium because of silver. So there's a chain of events and serendipitous meetings. So a potential client, wanted to buy some osmium. He started looking at the rare metals and he came across rhenium and he did some research and he kept phoning me, texting me 5, 6, 7 times a day, and I nearly blocked his number. And I'm glad I didn't. I thought, do you know what? I need to look into this. So I looked into it and I got some other people to do some parallel research, and I challenged a group of trusted people. Show me where I'm wrong. Show me what I'm missing. So this is rhenium in the sintered pellet form. Just looks like, I don't know, fishing weights. So that's 99.99% pure. What I like about rhenium is the production cannot be increased. It's 50 tons a year. It's a byproduct of a byproduct. So it comes from certain copper mines with certain molybdenum deposits. The scarcity is quite hard to grasp. One visual way I've got. So I've got a rhenium bar here. So that's an unpolished rhenium bar. And there's a bar of silver. So that's 20 ounces, that's 10 ounces. The whole annual production would be 80,000 of these. Now in silver, it would be 80 million, 1,000 times. So it's by weight, it's 500 times more scarce than silver. So that puts it around $77 a troy ounce retail current price, whereas silver's $32.50 spot troy ounce. Now, the difference between rhenium and silver is there are no stockpiles. No one has accumulated a stockpile. It's not traded as a commodity because the market is so small. So that 50 tons of mine production, it all gets used up. I think I bought it. Here we go. This is where 80% of it goes into high heat components like that's a General Electric turbine blade. So high heat applications use an alloy between 1.5% and 6% rhenium. We cannot make a modern jet engine without rhenium. Rolls-Royce, General Electric, they have spent millions and millions of dollars trying to find an alternative. There is no alternative. They have to have the rhenium. Now they're making a multi-million-dollar engine. So the effect of rhenium is not going to stop them. The price actually is not going to stop them making that engine. So the uses are very high value uses that are not price sensitive. Yet you can't increase the production. So as far as I'm aware, no group of investors has yet taken a meaningful supply out of the market. So at the current retail price, the whole annual rhenium market is $125 million. Now, pause on that for a minute. We cannot build an airplane, a satellite, a space vehicle, even a gasoline refinery. We can't refine. It's used as a catalyst in refining gasoline to get the octane boost. It's also used with platinum. You can put up to 20% rhenium in with platinum when you're using it as an anode for creating hydrogen. So it has lots of other uses as well. It also copes with extreme cold. So it's used in a lot of space vehicles where the metals have to cope with extreme temperature variations. Its properties are unique and can't be substituted. You can alloy it with this. So you can put some 27% of rhenium in with tungsten. It raises the melting point of tungsten and it makes it more machinable. It makes a super tungsten, for incredible high-end cutting tools. It's also being used with 47% concentration with molybdenum as the most superior medical uses. It will make joints, rods, pins, plates, you name it, that will never wear out when used surgically. It will not fail because of its metallurgical characteristics. That use alone could easily draw 20 tons. 4,000 operations have been done successfully with a rhenium molybdenum alloy. So I'm excited that Such a rare metal, it had no right to find industrial uses because there's not enough of it. Now, the price action has been incredibly volatile. 2008, it exceeded $10,800 a kilo. And it's been as low as $1,000 a kilo. Now it's hovering around the $2,500, $2,700 a kilo. Now, think on that as well. So 50 tons a year is the mine production. Platinum is 190 tons, and nearly 4 times as much platinum is mined. Yet platinum is around $32,000 a kilo. Now, as we talked earlier, platinum is undervalued compared to gold. Gold is undervalued compared to the dollar. Well, rhenium is incredibly undervalued compared to platinum. And so these key uses, there is no substitute. And even if they found one, they'd have to prove it, test it, benchmark it, roll it out. It take years. The recycling is pretty tight. They're really careful to recycle every scrap they can. So that would be hard to increase that. And even if they tried to, there isn't enough specialist recyclers because this is nearly 3,200 centigrade melting point. Only tungsten has a higher melting point. So the technology and the skills to refine it and separate it out from recycling are incredibly specialist. So I see it as a great addition. I think everybody should have their silver position because the silver just covers almost every eventuality financially going forward, complete to the end of the world Mad Max scenario, which some stackers talk about. I don't think we're going to go there. I think we're going to stay fairly civilized for a while yet. So rhenium, yeah, is just the absolute scarcity, and I think it's mispriced, completely undervalued.
Fantastic summary of rhenium. There's going to be a documentary, as I mentioned, on this channel. So everybody watching, keep your eyes peeled for that. Ian, this has been a fantastic conversation. Always enjoy having you on. Tell us about the latest special you've got going at ARC Silver Gold Osmium and how people can reach out to you.
Sure. I did write them down so I wouldn't forget. But so we've got Silver Eagles, $3.99 premium. Maples, $2.64 premium. Australian Kangaroos, $2.07 premium. And we got some Philharmonics at $1.95 premium. Now, these are sovereign coins, brand new, mint fresh. They may be older dates, but these are in perfect as new condition. We think these beat anybody in the industry out there. For the quickest response, please call me on 307-264-9441.
Great. Well, that number will also be appearing on screen as well as in the description below so people can reach out to you personally. Like I've said many times on this show, you're one of the most trusted people in the business. Even your competitors give you props for being honest and trying to help people to get the best value for their money for their own particular goals. So I highly recommend people reach out to yourself and just have a conversation and just see what Ian is able to do for you in regards to your precious metals stacking strategy. Ian, it's been an honor. It's been a blast, and I look very much forward to our next conversation.
Thank you, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.